Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 Nvidia heavy ETFs. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Nvidia is once again dominating headlines this week after they posted yet another quarterly earnings beat. So I figured it is a great time to take a look at a few ETFs that are heavily weighted in the Nvidia stock. Now all 3 of these ETFs today have slightly different focuses, but one thing in common. They offer some big exposure to Nvidia, but at the same time also offer some diversification to other companies as well. We're going to take a look at these ETFs, what their focus is, and what those top holdings consist of. We came across these ETFs right from the Nvidia stock page. When looking at the Nvidia stock over on TipRanks, we're going to go to the left-hand menu here to More, and here we're going to see an ETF exposure option. This is going to show you all ETFs with Nvidia exposure, which is 1,200 altogether. Now we can sort them by a couple different metrics here, such as weight in the ETF, market value, and assets under management. Just before we get into these ETFs, this is a friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's jump right into our Nvidia heavy ETFs. We're going to kick things off with Vanguard Information Technology ETF. It trades under the ticker VGT, currently priced at $569 per share. It has climbed over 29% in the past year. Looking at the last 3 months, it has taken a dip here, but overall is up about 6.5%. And it also boasts a low expense ratio at 0.10%. As the ETF's name suggests, they do focus on stocks in the information technology sector. They employ an indexing investment approach designed to track the performance of the MSCI U.S. Investable Market Index, which focuses on large, mid-size, and small U.S. companies within the tech sector. That sector is made up of companies in the following 3 general areas: internet services and infrastructure companies, companies that provide IT consulting and services, technology hardware and equipment, as well as semiconductor and semiconductor equipment manufacturers. This is our largest and most diversified ETF of the day, with over $75.8 billion in assets under management and 320 holdings. But even with hundreds of holdings, it is still very heavily weighted in their top 10, with 61% being focused on that. Now, Nvidia is not our number 1 position in here. In fact, it's third behind Apple and Microsoft, but it does hold a 14% weight in the ETF with a market value of $12.32 billion. Other names in the top holdings here include Broadcom, Salesforce, Adobe, Advanced Micro Devices, Oracle, Accenture, and Qualcomm. The ETF is primarily focused on technology and 100% in the United States. The ETF does pay out a slight dividend as well, with the current quarterly dividend being 76 cents per share for a dividend yield of 0.64%. Now, Wall Street analysts don't actually rate ETFs themselves with buy or sell ratings or price targets, but what TipRanks is able to do is look at all of those holdings and the different weighting and come up with an average ranking based on that. So with 320 holdings, this ETF does come in as a moderate buy, with 240 stocks coming in as a buy, 78 a hold, and 2 a sell. The average price target is just shy of $680, which would imply an upside of 19.5%. Down below, it'll also show you which stocks have the highest upside potential and the highest downside. Upside including 908 Devices, Xperi, and Cipher Mining, while some of the downside ones include CommScope, LivePerson, and Unisys. Our second ETF has a much more specific niche with Esoterica NextG Economy ETF. It trades under the ticker WUGI, currently priced at $67.35. It has gained 42% over the past year, and in the last 3 months is up 3.5%, taking a similar dip here in August. Their expense ratio is a little bit higher here at 0.76%, as it is a more actively managed ETF. They're focused on investing in companies relevant to a 5G-enabled digital economy. They say that NextG technologies are advancing our global digital economy and transforming our world. With their ETF, investors have an opportunity to tap into potential growth of companies created or enabled by 5G network technology, as well as other emerging techs. They focus on semiconductors, edge computing, cloud-native software, and enabling technologies, providing exposure primarily to the U.S., but also non-U.S. companies. This is our smallest ETF of the day, with assets under management just under $31 million and 30 current holdings. And another ETF that is heavily focused on their top 10, with that making up 76.7%. And Nvidia is our number one holding by a long shot here. Their total weight in the ETF is over 24% and a current market value of $7.6 million. Behind them is Meta Platforms, Broadcom, Amazon, Taiwan Semiconductor, Microsoft, ASML Holdings, Cash Position, Synopsys, and Macom Tech. Down below, we can see it is heavily weighted in the tech sector, followed by communication services and consumer cyclical, and also mostly in the United States here, but we do have 2.5% in Hong Kong companies. And this ETF does come in with a strong buy consensus. Out of the 30 holdings, 26 are rated a buy, 3 a hold, and 1 a sell. The average price target of over $82 would imply an upside potential of 22%. Looking at the stocks down below at the highest upside and downside, on the upside potential we have Micron, KE Holdings, Snowflake, JD.com, while we only have one stock with downside potential with Gaotu Tech. And our third Nvidia-heavy ETF is the VanEck Semiconductor ETF. It trades under the ticker SMH, currently priced at $238 per share. This one has climbed over 55% in the past year, and in the last 3 months is actually down slightly, just over 0.5%. Their expense ratio comes in kind of the middle of the group today at 0.35%. This is another ETF whose name well describes their objective, as they are focused on semiconductor companies. The ETF seeks to replicate the MVIS US-listed Semiconductor 25 Index, which is intended to track the overall performance of companies involved in the semiconductor production and equipment. They focus on some of the largest companies in the industry and ones that are highly liquid as well, based on market cap and trading volume. This ETF is much larger in size, but smaller in holdings than the previous one, with over $23 billion in assets under management, focused on 26 holdings. And their top 10 holdings make up 74% of the ETF. Once again, we have Nvidia in the number one spot by a good margin here at 22% weight and a market value of over $5 billion. They're followed at 13% weighting by Taiwan Semiconductor, and then Broadcom, Texas Instruments, Advanced Micro Devices, ASML Holdings, Analog Devices, Applied Materials, Qualcomm, and Kia. They are 100% focused on the tech sector, 100% in the United States. And this VanEck ETF does also pay a slight dividend. They pay it out on an annual basis, with last year's being $1.04 for a dividend yield of 0.44%. And this ETF also has a strong buy consensus from Wall Street analysts. Out of their 26 holdings, 21 are rated a buy, 5 holds, and 0 sells. The average price target of $303 would imply an upside potential of 27%. The stocks with the highest upside potential include Micron, ST Microelectronics, Intel, Lam Research, and Marvell Technologies. We have one stock with some downside at 0.05% with Texas Instruments. So that is a quick look at 3 ETFs, all heavily weighted in the Nvidia stock, but offering some diversification to other companies as well. Let me know your thoughts on these 3 ETFs, whether they were on your radar or not, or what other ETFs you love right now. I know there is a ton of great options out there. I think it was over 1,200 ETFs that have exposure to Nvidia, so let me know in the comments down below. I always love hearing from you guys. Keep in mind these videos are never a suggestion to buy or sell any specific stocks. Make sure you always do your own research and due diligence. Thanks so much for watching. Have a great day, and I'll see you back here next time.